there's no shortage of operating lessors.
Hmm.
Next need is lenders. A year and a half later, we had a lending platform that was fully funded and capable of providing financial loans to airlines, lessors, investors for not only aircraft, but jet engines as well.
This is the Time on Wing podcast. Welcome back. I'm Courtney Miller with Visual Approach Analytics. With me, as always, is Garrick Deschavant of Collateral Verifications. Garrick, who are we talking to today?
So today we've got Abdol Moabery from who's the founder and president and CEO of GA Telesis. And for those of you that don't know GA Telesis, you got to get out from under that rock. Everybody should be able to know. They've definitely done quite a bit over the years, and Abdol's kind of really kind of grown that empire, which is what I would call it today. First of all, he started GA Telesis back in 2002, so he's been doing that for some time now. But before that, he was EVP at Aviation Systems International. He was also in the sales and marketing team for CS Aviation Services. And he's actually gotten quite a few awards, actually. He's the chairman emeritus for Florida Atlantic University. He was, or actually is, president emeritus of the Wings Club Foundation. He also received the Wright Brothers Memorial Award and the ISTAT Lifetime Achievement Award. So, a couple of things. I don't know if he's going to have like some trophies in the background that we can see when we talk to him. That'd be kind of cool. But he also got a Bachelor of Arts degree in business from the Florida Atlantic University and an MBA from Kellogg School of Management at Northwestern University. So, Abdol, this is your time on wing. So, Abdol, thank you for being on the show today. We love to kind of chat with great personalities in the industry, and I think you kind of fall in that category. You've done quite a few things. One of the things that we do with all our guests is just kind of ask them, ultimately, like, where did aviation start, right? Where did your interest in aviation start, and how did you get to kind of get involved in aviation? So I'll let you kind of go and let us know how that got started.
Well, I want to say by accident, but not really. I've been around aircraft my entire life. My father was a career Northrop guy, so I've been around the military side of airplanes my entire life. Probably didn't know a lot about commercial aircraft growing up, and I didn't actually desire a career in the aviation sector. It's not what I wanted to do. It's not anything I looked for, but I ended up in the Navy. And in the Navy, I was surrounded by airplanes, and I learned a ton around that. And then after college, I just saw a job posting one day, and it said, "Do you like airplanes?" And I answered it. It was for a company called ASI that no longer exists today, but back in the early '90s was a company similar to what I do, much smaller. I joined them and haven't looked back. I think this industry is one that once you come in, I always say it's like the Hotel California. You can check in anytime you like, but you can never leave.
Yeah, they call them terminals for a reason.
Yeah.
Abdol, what did you do in the Navy?
I was a P3 flight engineer.
Oh.
P3 is a patrol aircraft that the Navy just retired this year. Replaced by the P8. So I was in for about 5 years. I did my duty essentially all over the world. It's a fantastic experience for me. When they say join the Navy, see the world, I did. They kept their word in that regard.
Nice. And so how long were you with ASI?
So with ASI, roughly 5 years, and then was up making a pitch to CS Aviation, and they offered me a job the next day. So I joined CS in late 97, early 98, and was there up until 2000. I had written the business plan for what was at the time called Telesis Aviation Management for them, and they didn't like it. They didn't believe in it, so I left and raised some money with my friend George Batchelor and started GA Telesis as George and Abdul. We started the company together, and unfortunately, George passed on. In July. We started in April of 2002. Formally, that's when everything was done and we were open for business. And George passed away from lung cancer in July of that same year. So,
oh my
wow.
God.
Yeah.
Wow, what a legacy though to keep the name and of course for GA Telesis to have grown to what it is now. How many times have you called CS to rub it in?
Well, certainly I have run into my former colleagues that told me the business plan would never work. Not so
Well,
much
you Fred
to,
Smith that one.
yeah, I would say in all cases, they're happy for me.
Yeah, good.
It could have easily gone in the other direction. And let's not forget, I was trying to launch this thing right after 9/11. I would say, were it not for George and his sort of intrinsic knowledge of the industry and the cycles, look, I had a whole bunch of PE guys lined up prior to 9/11. Post 9/11, they laughed at me. They hung up the phone. They stopped, returning my calls and my emails. But George, I hate to say that George was my last resort, but George was my friend. And you know what they say about going into business with your friends. It's not the right thing to do. So, I sort of came to him and he said, forget this starting a business thing. Just come work for me and I'll make you my president. You'll do great. And I said, no, I'm going to do this. I've spent the last few years trying to put this together. So I'm either going to do it or I'm going to do something completely different. And he said, all right, let's do it. So we went in 50-50 at the time.
Wow. So what was the original GA Telesis? What did that encompass? Because I think it's very different today than what it was back in 2002.
So when I was out on the street leasing aircraft at CS, that was my job. I was an aircraft lessor working for a hedge fund, and Soros was really the first hedge fund that was embracing sort of the aviation asset class. So we did aircraft leasing and we did freighter conversions. Those were our two sort of verticals that where we made our money. And the problem that I found, or the complaint I had the most, especially when we were leasing used aircraft, was the engine cost is too high. And basically the operating cost of the engines is too high. And if you want that lease rate with sort of those levels of either engine maintenance reserves or engine cost that I got to pay to an OEM, I can't make it work. So, the first plan was to create sort of an alternative to the OEMs, sort of power by the hour programs. So the first thing I built out for them was called ECPH. It was an engine cost per hour program. And what we had done at that time was we teamed up with Chromalloy and a company that no longer exists now, but was called Aviation Sales Company. They were a parts company, and Air India. And the concept was aviation sales was going to acquire material for the engine overhauls, and Chromalloy was going to repair those parts. And then Air India, because of the low cost of labor and really, really robust engineering capabilities, was going to turn the wrenches. And then I was going to charge my customers, so I'd lease them an airplane, and then offer them a fixed cost per hour to run their engines. problem with that, it was a great plan. Signed up. I think the first customer I signed up was Taka, down in Central America. And as soon as the OEMs found out about it, they cut price, and we were out of business as fast as we were in it. So,
Yeah.
couldn't compete. We were doing it to service our customers. We weren't doing it to build a business and compete with the OEMs. So fast forward, still needed a plan because the airlines that didn't have deals with OEMs were still complaining. So I convinced my boss to buy an airplane out of the desert, sort of recertify the engines, and then offer those engines as spares to our customers, so that they always had spare engine coverage. And then, as I did more and more research, I think at the time there was something like 110 parked DC-10s. And I thought to myself, times three. And then you look at the 747s that were starting to retire, times four. There was a significant number of engines available to purchase that had what is now called green time on it. So I came up with this concept called green time leasing. My concept was go out and buy all the airplanes in the desert or buy them directly from airlines and take the engines off, run them through a test cell, certify them, and then lease them on a cost per hour basis, flat, no risk to the airline. And I called it green time leasing. So when you hear the term green time leasing, that's me. I own the term, or that's my trademark. And I did. Well, I presented them that plan. They said no, too capital intensive, too risky. It's a chicken and egg. You got to buy the engines, because when you go to the airlines and say, if I had this, would you do it? They're like, sure, but I won't commit until you have them. So call me when you do.
Yeah.
And my boss at the time said, I can't go out and spend 10, 15, $20 million buying airplanes so that you might have the opportunity to lease the engines. And engine leasing was still kind of new. It was out there, but it wasn't a big thing.
Was this before GA Telesis, when you were with ASI, or is this?
No, it's CS Aviation.
With CS, got it. Okay.
CS, yeah. So my boss said, look, it's a good try, but we're not going to do it. And he sort of gave it back to me, and he said, you should go do it if you think it's going to happen. He's like, you're smart enough, guy, go do it. So I did.
Oh, and yeah. So what was behind the term green? Why green?
He knew the ESG. He was prescient.
Yeah. At the time, yes, it was my foresight into ESG and recycling engine life. And I am the sort of forerunner of ESG and recycling life. No, it was, so from my perspective, green was go. It was sort of, the usable life left on engines. It wasn't my intention to put engines through the shop, but rather do a pretty forensic analysis of each engine, do a borescope on it, sort of, if an airline or an owner let me do a max power assurance run, I would, and get myself comfortable that the engines had a sort of certain amount of what I called green time available.
Yeah.
And then I would go to an airline and lease that green time for so I knew what the engine cost was per hour and per cycle. So all I had to do was be between 10 and 20% below that, and no airline would turn me down. That was my business model. But as soon as I did it, I went to airlines and said, look, I got these engines. They're serviceable. They're tagged. They can be installed at any time. They have full QECs, and no operating risk for you. If the engine fails, you just give it back to me, and I'll give you another one, or you just go do something else. And so I was telling them that in one year, and then the other year, the OEMs were saying, well, we're not really sure it's a safe practice. you don't know the history of these engines, et cetera, et cetera. So there were some airlines that categorically wouldn't talk to me. But then, GE started doing this thing with Shannon Engine Service where they were taking engines and pooling them. And, you could have an engine on for a week on one airplane, and then a week later or a month later, it was on another airplane. I went back to the airlines and said, look, if you trust the OEM to do exactly what I'm doing, what's the difference?
Mm-hmm.
And I'm offering you different engine models. I wasn't offering at that time CFM-3. So we had a couple of smaller airlines agree, and then Continental came on board, then Lufthansa came on board, then Air France KLM came on board, then Northwest came on board, then Delta came on board. And at one point I had like 250 engines operating at airlines all over the world. And then sort of the fuel crisis hit, right? This $160 a barrel oil, which caused a lot of my major So I moved from only doing CFMs to also doing JT8s, JT9s, CF650s, every sort of legacy engine that was out there. And Northwest files bankruptcy. I had one engine on each of their wide bodies. So I was impacted pretty significantly. And the reason they did, that was a risk mitigation thing for them, right? By having on their DC-10s, one of three, and on their 747s, one of four engines being one of my green time engines, it was a risk mitigant. Like if one of my engines failed, no big deal. There was two or three other engines that could continue to operate. Never had a failure other than their bankruptcies. They filed, Delta filed, United filed, U.S. Airways filed. So I was in a world of hurt in around 2004, 2005, while these airlines were going through their bankruptcy. Luckily, because the airlines also didn't have money to go get engines elsewhere, they reaffirmed my lease. So let's say they had a chokehold on me for 90 days while they had their legal right to keep or reject an engine. And I made it through. Northwest had come to me and said, for our exit plan, we want to add a term to the leases instead of it just being as they operate. So they signed a 2-year firm lease term with me in exchange for a reduction in the hourly cost, and then they never flew them again. So so they paid me for 2 years for engines they didn't operate.
It's a wonder that airline went into bankruptcy to begin with.
So I was lucky. So I got back a whole bunch of very serviceable engines, and by that time the market was, we're at 2005, 6, 7, and the CF6 was a very strong engine model. The JT8 200s on the MD80s became very expensive engine models as well, and I had a fleet of both. I started in 2003. We started dabbling in the CFM-3, so I had some of those as well. And at one point, I don't remember, it was probably around 2004, my CFO came to me and said, hey, I want to talk to you about all the engine stands that we have. And I said, all right, what about them? He said, they're expensive. And I said, I know they're expensive. What's your point? He says, well, you're talking about the engine transportation stand. I'm talking about all those airplanes you bought that are sitting in the desert that don't have engines on them that cost us $4,000 a month to store. Because I probably had 50 airframes without engines sitting in Arizona and California. And we were paying about $4,000 a month to store them because we were trying to sell them, but nobody had money, post 9/11 and in that era to buy them. So I said, all right, well, let's find a company to part them out for us. So we found a company. We awarded them a couple airplanes. It didn't work out. And the guy I hired to manage it, I said, look, could you just start me a parts company and help me to liquidate all these airplanes? And he said yes. And we started a parts company, and then simultaneously we started getting engines back. And we had a choice: do you rebuild them or do you part them out? And from our perspective, we could still get enough supply in the desert buying airplanes with engines that we didn't have to refurbish engines. So we started to part those out as well. So I had a airframe parts business and an engine parts business, and the engine parts business took off right away. It was an immediate hit. We were sort of doubling in size every year, if not tripling in size, and the business took off. And then in 2000, when sort of the leasing company consolidation happened, and companies like Devis Air Finance, which is now AirCap, was rolling up portfolios to build a big leasing company, and Air Fortress was building Air Castle. They all sort of went down this, hey, we got to have a cradle to grave strategy, because if as we go to grow, everyone's going to want to know what we do with all these old airplanes. So we had a couple of offers from major leasing companies to buy us, and I went at the time to Merrill Lynch to hire them to represent us in the sale to one of the two big leasing companies that had made an offer. And Merrill Lynch at the time said, "Look, we got a pretty robust leasing business ourselves. We're in it, not in the scope that the leasing companies are, but we'd like to be." So they said, if you would give us 24 hours to get back to you, we might also be interested in making an offer. And they had the benefit of having seen the other offers. So they made a better offer, which I accepted, because differentiating it from the other offers, those were for 100% of the company, and Merrill Lynch only wanted 49%. So I could stay, grow the company, sort of on the coattails of Merrill Lynch's balance sheet, and really put myself into a position where I could exit in the future at a much bigger multiple than I was getting at that time.
Mm-hmm.
So that's what we did. In 2007, we closed with Merrill Lynch's investment arm, which was a company called Global Principal Finance Corporation. They owned 49%. It was a honeymoon on day one. A year later, in 2008, Merrill Lynch was bankrupt.
Yeah.
And I got a call in December of that year from the COO of Merrill Lynch. And he said, look, some really bad stuff happening here. It was a Saturday. And if he called me on a Saturday, I picked up his call, because bankers don't work Saturdays.
Yeah.
So he said, look, really bad stuff happening here. I just want to say, do what you can to protect yourself and your company. I don't know what's going to happen here. I said, all right, thank you for the heads up. Not like I could do anything in the month of December of 2008, but thanks for the heads up. Luckily, President Bush at that time had the choice of bailing out one bank. He had Bear Stearns, Lehman Brothers, and Merrill Lynch to pick. And he picked Merrill Lynch. Don't know why. Wasn't involved in that decision. But he picked Merrill Lynch and called the CEO of Bank of America and said, "You're buying Merrill Lynch." So in early 2009, we became an affiliate of Bank of America. And at the time, BAML, Bank of America, Merrill Lynch, combined had somewhere between $6 and $8 billion in aircraft leased and financed, because Bank of America, through their consolidation of the various banks like Fleet, et cetera, built leasing companies and had a leasing company. And at that time, banks were allowed to be a lessor. A year later, they weren't, but at that point, they were. So we became part of a much bigger group, which allowed us access to a lot more opportunities, and a bigger player in the marketplace. And we continued with them as our sole shareholder until 2012. Now, between 2007 and 2012, we diversified into the maintenance business, acquiring a couple of maintenance businesses. We acquired a composites company in Arizona. We acquired the aftermarket division of Curtiss-Wright for components in Miami. And then we bought another composites and structures company called Ultimate Composites and merged it with our existing composites business. So now we were essentially during that period, we became an aircraft lessor, an engine lessor, a parts supplier, and an MRO of components and structures. And Merrill Lynch Japan called us and said, hey, there's this company in Japan that's interested in talking to you guys about potentially investing in you. And at that time, we had already been approached by all the Japanese trading houses about making an investment. And we just said, thank you, but no, we don't need the capital, and we don't need another shareholder at the time. And, they said, look, just do us a favor and take the meeting. If you say no later, that's fine, but it's an important client to us. And at the time, it was called a company called Century Tokyo Leasing, which was a public financial company that was principally owned by Itochu and Mizuho banks. It was their sort of leasing and financing company outside of the bank. So I didn't even go. The guy from Bank of America and Andy Tout, my chief commercial officer, went to Japan, met with them. They agreed that they would come out and do a site visit, and then we'd figure it out. What was unique about, at the time, Century Tokyo was that they sent the person that came out was actually the president of Century Tokyo Leasing. Now, in working with every other Japanese company that was interested in us, they always sent out some general manager type of their aerospace or aviation division, never an executive. But this gentleman came out, and he and I hit it off right away. He was just very, very much aligned with our sort of thinking of sort of, we had a trading mentality, more, high risk, high reward, low risk, low reward. And we both liked the high risk, high reward model. So he came in and said, look, we'd like to invest in 20% of GA Telesis. And he said right then, he said, look, I'm willing to pay for you what it's worth, even though it's a minority stake. And he made an offer, and we and Bank of America accepted. So they came in at 20%. So fast forward 2013, they've now been a shareholder. Company has grown. It's well capitalized. We start getting phone calls again about acquiring the company. And one of the big OEMs came in and made an offer, which I would have taken in a minute. But Century Tokyo Leasing at the time had only been a shareholder for less than a year. And I'll say one of the reasons I love them is that they said, if you want to exit, even though really they weren't really going to make that much money because they'd only been a shareholder for 9 months, we'll support you and let you exit. Wow. So you can go. So the offer was made, and we gave an audible, yep, let's move forward. And that OEM ran into some significant manufacturing problems that year, and their board told them they couldn't acquire anything till they fixed the problem. So they asked us for a 6-month stay while they fixed the problem. Well, in that 6 months, from our perspective, our company continued to grow and we saw more value. And at that point, Tokyo Century had also given us access to financial instruments, Japanese style financial instruments, which were going to be huge in helping us grow our leasing portfolio. So we called off the deal and decided that we would just continue to grow for 5 more years and then make a decision as to what we were going to do. So now you fast forward around 2017, the Bank of America guys, the regulators, looked at GA Telesis and said, look, there's a rule, a threshold that after 10 years, you either have to consolidate your investment in GA Telesis by law, or you have to sell it. And they actually came to us and said, are you interested in being a consolidated part of Bank of America? And we said, no. It would make it too difficult. Their rule book, it was so significant and so cumbersome that we never thought we could operate with everything we do with their sort of risk thresholds. So we said no. Tokyo, at the time, again, Century Tokyo Leasing was just becoming Tokyo Century Leasing. They changed the name. I still don't know the reason why they changed the order, but Tokyo Century Leasing said we would like to buy all the shares. Challenge we had then was, do we want to be a consolidated part of a Japanese financial institution when we didn't want to be a consolidated part of a U.S. financial institution? The answer was still no. So they said, well, why don't we bring in a party to buy 10% of the company, and that way we'll stop at 49%. And we went and spoke to a lot. And so my idea was, why not bring in an airline? For a lot of reasons. One, we could learn a lot. Two, the airline could be a great customer for us and can learn a lot from us, and potentially lead us to a position where maybe we sold small increments to other airlines. So we went and talked to a lot of big carriers. All of them at the time said no, and all but two. And we ultimately ended up selecting ANA to be a 10% shareholder of the company. And, look, they were sort of, ANA Trading had a small parts company. They had a trading mentality. They were going to go through a fleet renewal. There's a ton of opportunities for us and for them to team up. So we agreed that they were the right partner. It was crazy. The second we announced the deal, all of those other airlines called and said, why didn't you give us a second chance at this? All of you said no. Didn't, some of them, excuse me, I don't know if I could say fuck no. Some of you said fuck no. Are you crazy?
You can. Yeah,
This is like every interaction I have with a girl in high school. Like, I wanted that to happen, right? They just call, like, wait, no, I didn't mean no. Like, well.
Yeah, so believe it or not, ANA's biggest competitor sent us this nasty letter and said, we think that if you're going to, work with our biggest competitor, we never want to work with you again. You didn't give us the opportunity, et cetera, et cetera. And I had a copy of their rejection letter, like, at my fingertips. And the guy that sent us the letter had no idea that they rejected us. and I said, look, give me a rejection letter. You guys said there's no strategic fit. Now you're upset that somebody else did it. So I applaud ANA for their foresight into making an investment into this side of the business. And as a result, we formed a company called Gateway Engine Leasing, where we jointly lease engines all over the world together. So that was one of the things that came out of it. We work closely with their fleet department on retirements and strategies around retiring their fleet and ordering new airplanes, how they manage their components. We've learned a ton from each other, so it's been fantastic with them as a shareholder. They just hit 5 years as a shareholder in December, so it's been a really good ride with them.
What you mentioned, if I have my time frames correct, I think this was in, well, it was during or just before the financial crisis when, by necessity, you started to part out your engine stands,
Uh,
and go into the parts business. And even on, I guess it was more on the engine side. You said the engine parts just took off and grew so quickly. What do you think drove that? Was it the timing of what was going on, or was it just an unmet demand?
well, I think it was an unmet demand. So at the time, so right around that same period, uh, GE bought a parts company called Turbine Parts International and decided that they were going to start selling used parts as well, parting out engines and selling parts, not only to their own engine shops, but to other engine shops around the world. Some years later, they and CFM did a CFM version of that called CFM Material. So now they have two. Um, but yeah, look, there were a lot of it was a very fragmented market then. It is a very fragmented market today. There aren't a lot of companies that, in scale, can part out enough engines to satisfy the market demand, even today. So you have a very robust parts market that there aren't enough engines to satisfy. So, but it ebbs and flows. So there are times where there's a flood of engines that you can part out, and then there's times there are none. So right now we're at a time where there is none. And the question is why? Well, unfortunately, you have the issue with the reduction in production numbers from Boeing on the Max, which is increasing time on wing for whatever narrow body aircraft it's replacing, be it a CO or an NG. And then on the other side of it, on the Airbus side of it, you've got engine issues, and that's affecting half of that fleet. They'd be retired by this time, that would fall in line with something that we would potentially part out or use for our green time leasing platform, are being used by the airlines. Still, we have had renewals of aircraft that sort of look. This all started with COVID, right? With the Max, the issue was prevalent back then. So 737 operators were holding on to their NGs that were hitting, basically they hit the end of the lease. So I can give you an example of back then, 5 years ago, we were supposed to get some airplanes back from a U.S. major. They extended them, and with the idea that, okay, the Maxes will be delivered and will be fine. So I think they first extended them 3 years, then 2 more years, and now they just asked for another extension.
Wow.
And these are aircraft that they were going to retire 5 years ago. This isn't an age thing. This is
Right.
is a fleeting thing.
Yeah.
And so they essentially are continuing to use engines that would normally be available to myself and companies that do what I do to lease, trade, and part out. And that is the current status. But I can tell you during COVID, we had just come off in 2019, we had a record year. The first quarter of 2020, we had a record quarter. So we were flush with cash. And then we went to ISTAT in Austin. I remember we thought we were the most innovative guys because our giveaway were little bottles of hand sanitizer because we were ahead of the game. And
Yeah.
we didn't think that that would really be the last aviation gathering for a number of years. And, I remember leaving there a couple weeks after thinking, wow, I haven't heard of a single COVID case after there was thousands of people together in Austin, Texas, right?
Right.
So this is no big deal. This is the flu. We're all going to be good by August and, back to work, In August, I'm like, what the heck's going on? This is
Yeah.
bad. But luckily we were flush with cash. So, the first thing I did was go to my board, which was vastly, on the other side of the board, Tokyo Century folks. And I said, look, I think the most valuable asset we have are the people. I can replace airplanes and engines, but I can't replace good people. So I got their approval to not lay anybody off. So that was the first significant milestone. So I went to my people and I said, look, you're all good. No one's going to be out of work. We all have to pull together and be here and keep this business alive. But this isn't a time to suck. Because if you're going to suck, I'm going to fire you because you suck, not because of COVID. And those were my exact words. And I would say that over the course of the next 3 months, there were 17 people that sucked, that just couldn't work during that period of time. But at the end of that year, we had more employees in 2020 than we started with in at the beginning of 2020. So net, we were higher. The other thing I asked my team was that if we were going to do this, unless it was sort of violating a lawful order, we were going to come to work every day. And we were going to socially distance and do all that stuff, check temperatures at the door, wash hands, have keyless and, open doors that you didn't have to touch, etc. We're going to make it safe, but we're going to have to come to work because the only way we could serve our customers is to be there. Like, I own a jet engine shop. You can't do that virtually. We have to ship parts and inspect parts. You can't do that virtually. But I told my salespeople and my managers, how do I ask someone making less money than you to come to work if you're not willing to come to work? Mm-hmm. And I myself will be here every single day. So I need you all to be here every single day. And they did, and we did. And end of 2020 came. We were more profitable than we were in 2020 because volumes had picked up, especially with cargo operators. And because we were working full-time on all cylinders at every division, we were picking up market share left, right, and center from our competitors, especially the OEMs that were working from home. And then in 2022, we were back to, we exceeded 2019 levels. And 2023, we achieved 2022 profitability in May.
Wow.
So we're going to have even the best year in the history of the company. And I got to say this, it's the people. It's not because I got more parts, I got more airplanes, because I got anything. It's because my team is still intact. The same people, we've been together for a long time, the same leadership, the same operating team, and we didn't miss a beat. So when the airlines came back full bore, we were here. And it wasn't like half our team was still we call OEMs now to manage our own supply chain. Half their people are still working from home. And people ask why is the whole airline supply chain broken? It's because people are still working remotely. And as crazy as it sounds, some of the OEMs have told their people, we've given up the real estate. You're always going to work from home. You're going to do your job from home. So how is that efficient or effective in supporting me and the rest of the airline industry? It's not. And, it's, you call people and, or you send them an email and they'll say, sorry, I'm on a Zoom call. I'll call you back when I can, and it may be tomorrow. where normally that person would be in the office, and if there was a reason to meet, they'd walk down the hall 10 minutes, take care of it. There wouldn't be a scheduled Zoom call. So I think the working culture in our industry, and I was shocked to hear even the airline industry, is still somewhat work from home style esque. And I think from my perspective in my business and my leadership, there is no room for innovation and growth in a sort of hybrid culture. How do you promote people that you don't know?
Mhm.
How do you build relationships and teamwork when you've only seen the person on a video conference? You don't. And some of the best ideas happen. I get a text from my CFO. Hey, call me when you have a chance. I have an idea. And then I call him, and he just got off another call, and he's like, I forgot. But normally,
Write it
he'd
down.
walk, right, I told him, make a voice note. But but normally he'd walk down the hall and say, hey, what do you think if we do this? And then we'd have a discussion. I'd say, hey, pull these guys in and let's have a call. Now you got to schedule a call. So I think to some extent our culture is what's leading to our growth and our success, and I think that's gonna continue. I couldn't be more thrilled with my leadership team.
I
Yeah. Yeah. And if,
remember back in this would have been even 21, having a conversation with he was in the financial sector, but a sales guy who would meet with his clients, and he said, I don't know that I'll ever meet with him in person again. I can do all this online. It's great. I don't know if they ever have to travel again. I said, really? What are you going to do when your competitor shows up? He goes, oh, I'm on a plane the next day. Like, I'll be there. I said, so, I mean, at some point, you're
Yeah,
not
it's
competitive
yeah.
if you're not there.
You're not. Look, look. We actually have had signs around the building since I started that say, if you don't visit your customer, your competitor will. And so for us, touch points are very important. Being in front of the customer is very important. So, look, we have people in 23 countries now, across 32 different operations. And I think our average face to face, what we call touch point, is it's 200 times a week. So 200 times a week, we have someone face to face with the customer.
wow.
So
It
if,
stresses me out
if
to talk to Garrick twice a week.
yeah, well, if you want, if you want to do your calls on Zoom and stuff, look, sometimes it is more. I'll say this. I have an airline in Asia. The airline says, "Hey, we have an issue. We want to talk." Now, a couple years ago, I'd say, "Well, look, I can take off on Saturday. I can be in Asia Monday morning, and we could have the discussion." And I would do that without hesitation. In fact, I had that conversation today with the customer, and I do plan on doing that anyway. But in a lot of cases, you could say, let's get on a video conference, get everybody together, and let's talk about this, and then we'll decide together what the next move is going to be. But nothing is going to replace, especially in Middle Eastern cultures and Asian cultures, the deal's done at the dinner, not in the boardroom. You meet during the day, you make your pitch, but if they don't like you at dinner, you're not getting the deal, no matter if you're the best price or not. They have to like you to want to do business with you. And from my perspective, that's a big differentiator between us and a lot of our competitors and our peers. We like to be there real time. That is why when we have a region is growing in terms of customer presence, we build an office and put people there. And Istanbul for us started with one person. And then and the other thing is they always have an office. We don't have people work from home because we think you got to go to work. And I'm a big believer that your kids need to see you go to work, not
Yeah,
work from
that's
home.
interesting.
So I always get an office for all my people around the world. So you go to work, and that office went from one person to two to I think we have 46 people in Istanbul now.
Oh, geez,
Wow.
wow.
So
Yeah,
that office is it's one of our fastest growing regions. Asia, same thing. It's just the team is just growing by the day. That market is growing. And here's the difference. Do I want, look, I can look at my peers and say they have either somebody flies out of here once a quarter or their Singapore office, once a month or once a quarter and goes and visits. My guy's there for dinner twice a week, trying to build the relationship and get market intel on what's going on. And I think that's a big differentiator between our culture of knowing our customer versus knowing our customer's needs, because the customer's needs come out in what's called an RFP. Um, you know, I, I hate the RFP culture. It's something that's become prevalent in our industry,
yeah,
but it is what it is. It's meant to build a level playing field and to maximize the value for the issuer. But I hate them because um, sometimes the best price isn't the best deal.
yeah. Now, so I remember this was probably what 2021 when you were pretty active on LinkedIn, kind of because you started traveling as soon as you could. I remember that, right? And you kind of started posting pictures of like, oh, first flight, and then all of a sudden it was kind of like showing everybody the number of flights that you had been on, where you were playing golf, right? All these different. You're like, I'm out. We should be out. Everybody get out. Like that's what I'm doing, and it's true. And it's it comes down to the being there while your competitors are trying to set up Zoom and trying to figure out how it works. It's definitely there. I mean, I know so next week Courtney and I are in New York for the conference week, right? And all these conference weeks we look forward to because we're able to get in front of people and chat about what we're seeing, what we're doing, all that. That's the highlight of when we go there, right? Because it's just you get a different interaction. It's so much more satisfying than me being on the phone or doing Zoom or anything else, right? So yeah, totally agree there.
Well, look, I got a lot of good sort of comments about that, and I got some negative ones as well. Obviously I got a lot of people saying, I thought guys like you only flew private. And I said, well, why would I fly private if my primary customer relies on my revenue to pay me? So it's
Right.
like these nice cushy seats are very comfortable, and I'm happy to support my airline customers. And other airlines tell me, look, we're not allowed to meet with you. We've been told we're not allowed to see anybody. It's like, well, I'm going to be at this restaurant at 6 o'clock in Dallas, and I have a table for four reserved, and I'll be alone. If there was three other people that wanted to join me for dinner, social, it would be great. And crazy it sounds, I had to have a lot of the meetings that way. I had to have a lot of the meetings. A lot of them, they say, look, I know you've been posting on LinkedIn and others. Please don't post that we're here with you. We'll get in trouble. We're not allowed to have vendor or partner engagement. Um, so that was fine. But I think in 2020, by the end of 2020, for that 9 months, I had done something like 66 flights while everything was closed. And then by the next year, by 2021, I had something like 175
Oh,
flights.
geez. Wow.
Um, and it was my mission to show people that it was safe to travel, and that there was no look. As much as everyone wanted you to believe that wiping down your seat with an alcohol swab was going to protect you from COVID, the guy breathing next to you was going to wipe any sort of protection away. So that was number one, right? It's not, look, yes, they use HEPA filters in airplanes. They swap oxygen every 2 seconds, all that stuff. But the guy next to me is still breathing on me, whether he's trying or not. And if he's got COVID, I'm going to get COVID potentially. So I thought that the wiping down of seats was crap. We had made an investment with Honeywell in buying these contraptions that it looked like a galley cart. You rolled it down the aisle once and came back once, and it killed 99.99% of everything. Airlines weren't interested in really doing that. They were in the spray bottle mode where they had a ton of people with spray bottles that were going around and sanitizing anything. But the reality was, the second somebody walked on that airplane, you were at risk. And so I just wasn't
which isn't
buying.
even that kind of disregards the whole terminal experience, where you've been at risk the whole way before you got to the aircraft. But again, people were freaking out for a long time.
Yes, and I honestly, so a couple things. One, I think I had COVID in 2019 in China. I was there for our year-end board meeting for our Chinese joint venture with Air China.
You didn't eat any bats, did you?
I did not.
Okay, all right.
But
Just checking.
I remember that year during Christmas, I thought I had whooping cough because I looked up whooping cough. I didn't know what it was. I told myself, if there's no such thing as whooping cough, I have it. And so I called my doctor, and he said, as long as your fever is below 101, don't come here and give us whooping cough. If you go above 101, come see me. Nothing I can do for you. And I was probably, look, back in 2019, when you got sick, you went to work. Like, you just went to work sick, right? Mm-hmm. Unless you were throwing up or on the toilet, you went to work. So I went to work every day. There was, I sit in an office by myself, so I was clear. But when my family got COVID in 2020, they got it in November of 2020 during the Thanksgiving holidays. I didn't get it. So I hired a company to come to the house and do an antibody test, and they did an antibody test on me, and they said, you got the antibodies, so you've had it. So maybe I had it from my China trip in 2019, and I'm patient zero, and I brought it over here. I don't know.
You were the one.
Or, I don't know, or maybe I just got it and I'm one of those asymptomatic people, and I had it and I just didn't know I had it. But to this day, I've not caught it. I've not had it. So and I've been out there. I've been
175 flights. Yeah, so, I would say so.
So I have a theory on that, and I have no scientific backing to this, but if we have the vaccine, if you get vaccinated, then you have boosters, so you're good for so long, and then you need to be exposed again. If you're constantly exposed, aren't you constantly boosted? Is that how that works? It's actually an open question.
So in 2021, I got my vaccine, and then 90 days later, I got the booster. So I didn't get another one. That was it. And really, there's nothing with doing the vaccine. I just forgot. I didn't think about going and getting another booster. When I had my executive physical this year in January, my doctor said, I don't have the date for your last vaccine. He said, I have the 2021. I was like, yeah, that was my last one. He's like, your antibodies are still high.
Yeah,
he said,
that's
it looks like you just had a booster. And I said, nope, I haven't. He's like, all right, well, he's like, you're one of the lucky ones. So maybe I'm a lucky one. Maybe I was exposed and I just don't get the symptoms from it.
Yeah.
I don't know. But what I can say is this: I think the world learned a lot about viruses and epidemics and pandemics, and unless it's something like Ebola or leprosy or something crazy like that, I don't think you're going to see a lockdown again. I think the damage that was done to the mental health of the world, as well as the physical health, physiological health of the world, is now known. And I think at some point now we just say, all right, if we have to wear masks and do things, we're gonna, but we're not shutting down. Countries have been destroyed by the closing of their borders. There is harm, financial harm that's been done to those countries and therefore their citizens that is going to last for decades, and ours included. I mean, think about the increase in our deficit because of
Sure.
because of the shutdown and the government having to step in. And
Yeah.
thank God they did. I got to say, if our government didn't step in and help our industry, all industries, ours especially, we would be in a world of hurt.
Yeah,
no, very true.
absolutely, right? I mean, that didn't happen. Latin America really was kind of left to their own devices, the Latin American airlines, and they all kind of went through their own restructuring, and Brazil opened early, right? So
Yeah.
they were allowed to travel.
Yeah, but they came over here and filed bankruptcy, so
Well,
they
right,
used
yeah,
the
that's a good point.
so they got their bailout from the U.S.
That's a good point.
So if we could switch gears a little bit, regarding, we talked a bit about some of the current OEM issues that we're seeing, right? I mean, you've got delivery delays, you've got supply chain issues, now you've got, engine issues. So when you look at your business, right, how has that impacted your business, and how do you view that, right? Where do you see potentially the challenges or the opportunities that are kind of tied to that, with everything that's going on?
Well, the most simple is back to what I talked about earlier, where because the airlines aren't getting their new airplanes, the airlines are extending the leases on my older airplanes. So in that regard, it's good. Anyone that owns a CO, a NG, a E-Jet, sort of the first generation E-Jet, is seeing lease extensions. So in that regard, that is a great benefit to companies like mine that lease aircraft, because they're all deployed. I got nothing on the ground. On the engine side, because there are such big disruptions in supply chain that continue with all of the OEMs. This isn't a Pratt thing, a GE thing, a CFM thing. This is all of them across the board. Rolls, everybody. Airlines are coming to us and asking for longer term leases on spare engines or replacement engines, or looking to do engine swaps, giving me sort of their core to rebuild, and then with an option for them to take that engine too. So the opportunities for companies like mine are vast. I think for all lessors that placed orders that are for the newer stuff that are coming in, they're placing them as fast as they take the deliveries.
Yeah.
You're not seeing any whitetails really in the marketplace. There might be some delays and things, but it's not because of a lack of demand. So, and what's interesting is that when you often when you have a part of the world that is going through turmoil, like we've had with Russia and Ukraine and sort of that surrounding area, you feel it. There's just surplus aircraft. There's all kinds of things that you feel, but really haven't felt. I mean, certainly we had airplanes in Russia that were confiscated by the Russian government. We felt that, but we haven't felt an impact on the rest of our business as a result of what I'll call a major war going on in that part of the world. That said, what happened this week, school's out on whether that has an impact on
Yeah.
on us all.
Yeah, and I think like so Russia Ukraine, which was what that was kind of the ISTAT crisis of 2020. It's not that it didn't have an impact. Yeah, I mean, I'm sure that it did in terms of just what it did to the supply and demand of the market. But I think that speaks more to just how big the impact kind of post COVID with the supply chain was to completely engulf that. It's much more than a hiccup. I mean that's a pretty big issue, but the COVID supply chain issues were that big that we didn't really notice the impact that losing the Russian fleet did at the time. Again, who knows what's going to happen from this week? It's just another issue that the industry is going to have to deal with. But overlying all of this continues today this new vocab term that we all use daily in the industry now. That was almost a given, right? It's, oh yeah, that happens. The supply chain runs. Today, that's not necessarily a given anymore.
It's not. And a couple things happened. So I'll talk about the different sectors. So on an OEM side, a lot of the OEMs, especially the very big ones, offered early retirement packages for a lot of their senior executives and sort of long-term staff. So those people left, and it was a win-win. They got a package to leave, and the airline or the OEM could stop paying them and cut expenses. But the people that left were the know-how. A lot of them, they were the only ones that knew how to do what they were doing. And they were the ones that placed the order for the raw materials or for the replenishment of supply. And now that's been moved over to airline or employee X who works from home. And the order was never placed. I can't tell you how many times OEMs have told me that story, that we just simply didn't place the order for the materials that we need, so we're just behind because of that. They're being very honest about it. It's like we just didn't place the order. We you know it could be a lot of reasons. It could be that we were cash strapped at the time. It was the middle of COVID, and this thing has a 2-year lead time, or the person that normally ordered it took a package or retired, or it was moved to somebody that works from home, and supervision on orders is different, and all kinds of we've heard it all. So there is that. Then on the MRO side, especially in countries that went to full lockdown, their people, some of them just didn't come back. So you had a person, they were let's just say a mechanic, and or a technician, and the MRO was shut down for a couple of years, let's say in Southeast Asia, where they had or Japan, let's say, where they had a complete lockdown, and the employee decided after being gone 2 years, they just wanted to go somewhere else, do something different. So they didn't come back. So you lost them there. Then on the airline side, very similar. They retired. They offered packages to a lot of pilots to retire early, so they could look. In their defense, they went from flying 100% of their routes to 10 or 20% of their routes, and they had no visibility on when it was going to come back. And all the analysts were saying 24 or 25. So you can't afford to pay a pilot $300,000-$400,000 a year to sit around and wait in case you fly. So they offered a lot of packages to retire pilots, and that leads to what is now a pilot shortage. Those pilots are all sort of running boat charters down here in South Florida, because they got a big check to retire early from their major airline, and they're getting a great pension. So, and then the people that used to run a lot of the airline operations also took packages and retired and went away. So the setback was that and back to what I said originally, the most valuable resource was the people. Um, we saw it, we preserved it, so we didn't have that hiccup. But all of them didn't. And but look, at the end of the day, I'm governed by a board of consisting of shareholders and some independent directors, not a big public company board that answers to Wall Street. And if Wall Street thinks your SG&A is too high, they're going to hurt your stock price. So counting expenses, then they're going to hurt you. So they had to do what they had to do. But I don't I think they took such a draconian sort of view of I kept thinking, if you asked me during the entire pandemic, it's like just one more month, one more month, one more month, I was probably the most deep in prayer before I went to work, really before I went to bed every night, that tomorrow I hope we wake up and this is eradicated. And then it wouldn't be. But finally, when it was, I was intact. My organization was intact. I didn't have to build anything. I didn't have to go backlog on orders, etc. We even Some of my leaders took action. They went to the OEMs and bought a year worth of supplies, which was painful because I had to hold that inventory before we needed it. And it was more expensive for me, but I could service my customers better because I had what they needed to get their airplanes flying.
Yeah. Yeah. Wow. So if you look forward, right, where do you see your biggest challenges or opportunities, right? If you look at the next maybe 10-year time frame, right?
I think
how do you see that
context
landscape
to this? What really strikes me in kind of hearing the story of GA Telesis is about every 5 years you deal with an existential crisis and you come through it. So really what we're asking is tell us the next existential crisis so that we can know how to get through it.
You're not wrong.
Yeah, right.
We about every 5 years we hit a big one. We look, when things are bad, we still do well because we are capable of dealing with distress. And we deal with distress a way that most others can't deal with it because we know the value of every part on an airplane. So, the math is a lot easier for us, and we have this innate capability to do things with assets that others don't have. But that said, we are constantly looking at the future and saying what might happen. What is it that is going to be needed in the future? A perfect example of that is our Halo product that we launched in March, and that is our lending platform. So what we thought was going to happen with the rise of interest rates was the banks were going to tighten to whom they lent and the amount that they lent. So there was going to be a contraction in the amount of available debt to the overall market. So it took us almost 2 years to put it together, but our view was it was very clear that the Fed was going to increase the interest rates and then the world was going to follow. And when those interest rates went up, it was going to be more difficult to borrow money from the market. And then simultaneously, the whole Ukraine thing happened, and things got banks got tighter on what they would lend and to whom and to what jurisdiction. So we in Tokyo Century and Intervest put together a partnership called Halo, which is, depending on who you ask, the acronym is either High Altitude Leverage Opportunities or Holistic Aircraft Leverage Opportunities. I don't know if we ever decided which one we are, but we're Halo. And we got to the market right on time. We launched at ISTAT this year. And it was crazy. We thought our first customers were going to be lessors, smaller lessors that were going to have difficulty going to the mainline banks to borrow money and be their lender of choice. And airline after airline after airline saying, okay, we have to use this airplane for 5 more years. So we need a note on our airplanes because we don't want to do a sale leaseback. We want to own them. So that's been an incredibly powerful tool for us. So, but if 2 years ago I was asked next week if I had, I remember Ran Ackerman asked me the question. He said, if your grandmother died, God forbid, I remember him saying that, and she left you a pile of money, what would you do with it? And so it was a panel. So they went through and they said, I'd buy narrow bodies, I'd buy engines, I would do this, I would do this. And I said, I'd be a lender. I said, from my perspective, the next need, there's no shortage of operating lessors.
Mm-hmm.
Next need is lenders. And essentially that's on that day we started our process, and a year and a half later we had a lending platform that was fully funded and capable of providing financial loans to airlines, lessors, investors, for not only aircraft but jet engines as well. So for us, it's about innovation, like looking in the future and saying, what is the market going to need, and how do we take it to the next level? Now, that said, that's only a piece. For us, we think the next innovation is sort of the digital transformation of the industry as a whole. Our industry is, other than the passenger experience, which airlines focus a lot of their technological spend on, we are an analog industry. We still do stuff with paper. It's crazy. You still hear the printouts when you're boarding an airplane, right? They're printing out the manifest to give to
The
the
old
pilot,
dot matrix,
right?
yeah.
Yep.
Still dot matrix.
Yeah.
So the digitization of the industry and the use of data to make informed decisions is our future. We hired, just over a year ago, we hired a gentleman. His name is Dr. Rainford Knight. He's actually a physicist and a PhD in finance, and he just happens to be my college roommate, but a brilliant guy. And what I tasked him to do was digitally transform every part of GA Telesis into the next generation company. So he's built a team of data scientists, and it is literally probably our fastest growing area, that are constantly using data to make decisions that empower both us and our customers in making better decisions. You might have read, we did a deal with Google on creating automation. So we have these processes, RPAs, robotic process automation, where we're taking manual processes and using AI to determine what that process is, because it could be one of 10 things when the information comes to us, and just processing it automatically. And there is a human at the bottom of the funnel making sure that the computers are making the right decisions. But with about a 98% accuracy, we are making the right decisions. So we're going full force into AI. We have a team that's built out and mature. We have data scientists. We have partnerships with research universities to help us to create it. We have a partnership with Google, who is giving us resources and access to processing data to process information, so that, ultimately our goal is to be the black box for the airlines, to allow them to give us data and have us give them the answers that they're seeking without, so they could focus on the passenger experience. And essentially that's what they want to do, right? I mean, think about the evolution of just the passenger experience from before COVID to today. They've taken the junky monitors out of seats and replaced them with really nice touch screens that can pair with your phone. You can also use your own tablet. So airlines that don't want to have those touch screens, you can watch whatever IFE on your own phone or your own tablet. They give you internet, and a lot of them are giving you the internet now for free to
Yeah.
keep you entertained. Well, that is a ton of money that they are investing in the passenger experience, but they are not investing in how do we make decisions on which thing to do next. And that's where I come in. I'll handle the back of the house and tell you if you're making the right decisions based on the data you give me, and you go out and execute, keep your passengers happy. We always say that, our customer is our customer's customer. So, for us, when we go to Southwest, we say, like, what's important to your passenger? And they say, well, our passenger wants to be there on time. That's what they want. They want, if they bought the ticket, they thought it was a fair price, they want to be there on time. So my goal is to make sure that Southwest can meet their passengers' requirements, and that is to be there on time. So that's how we look at everything that we do. What does our customer want? And that's worked. And this digital transformation is just another way using AI. And believe me, I've had, anytime a company comes out and says they're using AI, we call them in with the idea of, look, if these guys got an idea, we'll buy them. And we'll just bring them in and integrate, because we've got a pretty mature system going on and processes and people. So, this isn't our first attack, our first approach at AI was when we launched our dig group in 2015. So we've been trying for a long time. It's just recently that we've had some great successes in leadership. But we call these companies in, like, okay, here's our AI. Like, it's not AI, that's data processing. There's a whole difference between, data processing and AI. From my perspective, where we're going to get to is a place where my employees will come in, they'll turn on their computer and say, what parts will JetBlue need today? And it'll say, based on JetBlue's flight data, these are the parts they will probably need today. And they'll call JetBlue and say, this aircraft is going to require these 6 parts, this aircraft is going to require these 3 parts, et cetera, et cetera. And if we can provide that with certainty, then we control the supply chain. So that is part one of our digital transformation. Part two, we received the patent for 2 weeks ago, and it's called Smart Certs. And a couple of years ago, probably again 4 or 5 years ago, when we set out on this digital transformation, we thought, what do we need to address? And that comes down to, you guys know this as well as I do. When an aircraft goes from one airline to another, there is pallets and pallets of records. Now, some airlines have digitized those records. They call it digitized, and that digitization means they scan all the records, and now they give you a CD or a memory stick, and they say our records are digitized, but they're not searchable.
Yep.
So we created a technology called Smart Certs, which is perfect with what's going on with this guy that's been selling these sort of bogus certed parts recently out of the UK. It's almost sort of spooky how we got our patent sort of the week that this guy did this or got caught doing this. But basically, Smart Certs tokenizes information and basically creates a digital twin of all paperwork, so that you can't, I shouldn't say can't generally, but it makes it very much more difficult to alter paperwork and aircraft records. But it also puts the aircraft records in the blockchain. where they could be viewed by anyone, and we would. Part of the process is putting uh, all data into HTML and XML formats. Therefore, it's searchable, and every aircraft is digitized. But so there is a look back feature where on all the aircraft you already have, and then there's the new feature of a brand new aircraft and how you start to do that, how you track it, and the concept is the asset management value alone in terms of protecting the value of an airplane that has the full integrity of all the parts, the records for all the parts is huge. It will save airlines hundreds of millions of dollars, where in cases where they return an aircraft to a lessor or don't have all the records or they can't find something, and they make them recertify it or replace it. So so for us, the future lies in digitization as it relates to that. But I think on the sort of business, look, I think the aircraft leasing business is simple. It's a cost of money thing, right? If you have the lowest cost of capital and your capability of doing a sale and lease back, or if you have an aircraft that somebody wants and you're capable of leasing it to them, it's simple. So there hasn't been much innovation. ABS has been around as long as I have. It just got really popular sort of the last 5 to 7 years. Um, so something new, some new financial product has to be developed to address the needs of the airlines. One of the things okay, um, the cost of capital is a determinant. But what else? Needs of the airlines. They lease their airplanes. They lease their spare engines. There's financial instruments like ABS, ETCs, double ETCs, JOLs, JOLCOs, sort of KG finance. There's all kinds of different financial instruments that exist around airplanes and jet engines. So we looked at that and said, look, that really comes down to you have the asset and someone wants it, or you have the lowest cost of capital and someone's willing to pay what you're asking. So we created inventory leasing for the newer generation aircraft. We're currently I would say, just because I don't think anyone else is doing it at scale, we're the largest in the world at leasing inventory. I know I'm the largest owner of 787 inventory in the world. I finance virtually every airline in the world on their 787 inventory because it is so expensive. The inventory for the new generation is double or triple the cost of the previous generation per piece. And part of that goes to risk sharing elements between the airframers and the component manufacturers, and part of it is technology is just more expensive. So airlines don't want to hold it on balance sheet. So we created the inventory leasing tool. I think we have about 45 airlines that lease anywhere from $5 to $50 million of inventory from us. And that's on aircraft. We got it on Maxes, on Neos, on 350s, on 787s, on 777s. And we even have one customer that extended their NGs because they couldn't get the Maxes in time. So we do their NGs as well. So for us, those are the sort of three sort of attempts at addressing the future needs of airlines. It's going to get tougher, as oil prices go up, especially with what happened last week. Airlines are going to potentially be cash strapped, and as they take delivery, the RSPL on a typical narrow body is between $3 and $5 million per airplane. It's recommended, so let's say it's 3, not 5, and then you order 30 airplanes. So do airlines really want to spend that on inventory when there aren't guys like you on the inventory side that can give them the assurance of what their inventory is worth in the future and be right? You guys are good at it on airplanes, but on inventory, it's hard because it is completely a supply and demand equation. So a $10 million airplane today is something that was probably predicted by you guys as being worth somewhere around $10 million 10 years ago. But a $10 million inventory, you have no, it could be worth 10 cents. It could be worth zero.
Hmm.
I mean, think about this. Think about airlines that bought A380 inventory. What's that worth? Zero, right? So, because of our size and the scale of our company, we are capable of absorbing that risk. And when we end up with something like an A380 part, we're capable of selling it to the few outlets that might want it if the airplane went out of favor.
Yeah, I'm fascinated by the digitization. I like how you split those into three there. The first thing that comes to mind in your JetBlue example is very similar to what Amazon does with their fulfillment centers, right? They're guessing what product needs to be not necessarily at which customer, but in which warehouse to get to the highest number of customers quickly. And of course, they've been using machine learning models to develop that for years. And then the blockchain, which I'm a huge fan of, mostly because everybody laughs at it right now after crypto, but they don't understand what it really is, right? I mean, it's
Yeah, they
especially
they they, they look at it. They're looking at it as truly just a clearinghouse for cryptocurrency.
right.
Um, and we're looking at as a impenetrable ledger where we can
Yeah, it's a
store
public ledger,
information.
exactly. Yeah.
And we created our own hyperledger 4 years ago. And our thoughts on the ledger is, we're not, to the extent we get to the point where we offer it up to the industry to store their information, we're not going to make our money through the storage of information on a hyperledger. Big deal. That's nothing. You could do it in the cloud, and it
Hmm.
could potentially be just as safe. We're going to make our money by creating data APIs that allow you to track information and search for information. So, an airline that we have it all the time. It happened this week. An airline bought an airplane, and their civil aviation authority asked them for the landing gear records, and they couldn't find them. The leasing company that sold them the airplane said, "We gave it to you. You signed for it. You got everything. Sorry, we got nothing." And they came to us and said, "What we can determine, you guys were the last uh, repair station that overhauled the landing gear. Can you get us a copy of that landing gear records?" And we did. It was no problem. We got it to the airline. But in the future, that airline will just be able to type in the serial number of their aircraft, search landing gear, and find the records right there. They'll be in the hyperledger. So that's our vision. Pilot training logs, flight logs,
Hmm.
all in the blockchain, can't be compromised. I heard a lot of stories about Western pilots going to Asia claiming, here's my logbook. I got thousands and thousands of hours. Airline took their word for it. Turns out they had 500.
You literally,
Um,
it's whatever you write in a book. That's all it is.
exactly. That's it.
Yeah.
And you use different colors ink. You pull out a pen. This one's blue. The next one's black. Then two blues, three blacks. I read this whole story about it, and these guys convinced airlines to hire them on the basis of thousands of flight hours when they didn't have it. Same thing. You put it in the blockchain under your whatever social security number or whatever, and it's well, you wouldn't want to do that, but some sort of number, and then it's searchable to see how many flight hours you actually have. And then the airlines just put the data in there, and anyone that needs to know or see it can see it, and other people can't see it. So, from my perspective, we'll make our money by creating applications that allow access to find that data for people uh, that are allowed to have it.
Yeah, you build the casino. Well, it's a bad example. You build the bank and you charge the transaction fee, right? That's perfect.
Exactly.
Yeah.
Exactly.
Yeah, yeah,
That's exactly right. So, from our perspective, there was a lot of BS blockchain companies. Again, just like the AI companies, we called them all in, and said, if you show us that you've got this figured out, we'll buy you. And we haven't found a single one that is truly using the blockchain for what we envision and what our patent envisions or requires it to do. So we're just building it out ourselves, and we're partnering. We're looking at the big guys. We're working with Amazon. We're working with Microsoft. We're working with Google. Google is actually invested in our success in some of the AI processes that we're creating. Not because they like me, because they look at it and say, if I can get it to work there, then I could take that to the automobile industry or the shipping industry, the logistics industry, and do the same thing there, because we all have the same issues, the same sort of general requirements. We just do it for a different reason. And it's been really cool. We've gotten, our CIO, I never see him anymore because he's asked to speak at so many Google events. But it's good because for every one of those events, we get contacted by a company with an add-on or an idea on how we could better enable our product. But, I would say what I attest to some of our successes this year has been sort of the black box technology we have created around supply and demand, and that has enabled our parts division to sell greater amounts because we know what parts to have in stock and when and where, much like what Amazon does with their warehouses with just general products. Our trademarked catchphrase on that is transparency and immediacy. What we're trying to provide the airlines is transparency and immediacy. So, we really studied the e-commerce model, spent a lot of time looking at Amazon, and we took it down to two things. What are the two things that Amazon provides their customers? They provide them transparency on any product, so you could see everything about the product you've selected and every competing product available on the open market. You can see a star rating as to how that seller behaves, how that product behaves. You could look at customer testimonials about a particular product or a service that they receive. You can see the historical pricing. You can see everything. You get complete transparency. And then beyond that, if you want it, you can get it immediately. And immediately has various forms. Immediately is in the next 4 hours, and it's in the next 4 weeks. But you can order it immediately, and depending on who you order it from, will gauge how long it takes for you to get it. So from our perspective, our whole digital transformation that we're working on is based on those words: transparency, immediacy. So we are creating a platform that will provide airlines transparency and immediacy. Now, that may mean, very similar to Amazon, I may have to go from being a seller to a facilitator of the sales, because the trap Amazon got caught in was that they continued to sell and have been accused of using customer or seller data to create their own supply chain and their own supply forecasts. I don't ever want to be accused of that. I'm not saying Amazon did it. I'm just saying that's what they're accused of. So if I can build this right, I will just be the platform that houses all of the inventory, all of the assets, and that includes airplanes and engines and everything, where I give the airline industry transparency and immediacy on everything. So think about it this way: the aircraft records would be on my site in the blockchain. If a lessor wanted to share the details, they would give a code to an airline. The airline could look at every aircraft record and go and search for whatever they wanted. They could see it, and as soon as they leased the aircraft, that transaction would get logged. And now there's a log of airplane went from, let's say, AirCap to American Airlines on this date. If we can get the ACARS data to feed in the system, and we can track the flight hours and cycles of the aircraft, we can also then provide the airlines additional data that they could use to better optimize their fleet performance.
Yeah.
Long term, it just can grow and grow and grow and grow. So, so for us, inside of the next 5 years, I don't know if we're going to go into this sort of perceived World War III cycle, or things will calm down. I'm hoping and praying they calm down, but we'll be ready for it either way, and be in a position to provide these sort of services to the entire industry.
Yeah. Which is, I mean, that to me, that's what makes this industry so fascinating, right? It's the innovations that come through from people like you, from others, that just kind of, it's exciting to see what happens next. You can play dumb if you want. I mean, you should be pretty good at that. So,
Practiced.
Yeah, we'd like to meet with Pratt and Whitney this week. It'd be great. All right, we're gonna send.
It looks like
John
Pratt and Whitney are both busy.